For a little bit more right now on Lowe's, also a look ahead to Home Depot's earnings tomorrow, we are joined by Gary Balter of Credit Suisse. According to Bloomberg data, Gary is one of the most accurate forecasters of Lowe's and Home Depot. He has outperformed ratings on both. Gary, glad you could join us this morning. So Lowe's surprised both on the top and the bottom line. Did they beat as much as you expected, or were you expecting an even bigger windfall?
We were hoping for a bigger windfall. They pretty much did the quarter as expected at 34 cents. You know, that was 4 cents above the high end of their guidance. They raised the year by the same amount. I think some people were hoping they would guide higher in second quarter. Second quarter 57 to 59. We're at 59. The street's 62. So that will probably send the stock down this morning. But the key for them is, could they comment on what are they doing in big ticket? What are they seeing? Because they had kind of mixed commentary. If they could say big ticket's starting to pick up, then it means their guidance is probably conservative and they'll beat the full year. But overall, it was a pretty good number, just expectations to gone up a lot.
Gary, this might be surprising to some people because when we think of Lowe's and Home Depot, there's basically two exposure points: the housing market in some respects, and also just this health of the consumer. Now, Friday, I know we saw retail sales up for a 7th consecutive month. How much do both of these companies gain on consumer trends like this?
Well, the home improvement data that was in Friday's was actually quite positive. And consumer confidence and just consumer spending in general is very, very important to the sector, especially for the bigger ticket items. So it was a good signal. If we could see more of that, like we think we're in a positive trend, then that would be a real positive for both companies.
How much does housing have to improve, Gary, to see upside for both?
We need housing stability. We don't need, we look at existing home sales. It is the #1 correlator with the stocks, and that's been starting to show some life, even with foreclosures in there. If that could stay strong, that'd be a very big positive for both names.
Now, you have an outperform on both stocks, both on Home Depot and on Lowe's, but from your research, it seems like you have a slight preference for Home Depot. Why is that?
We like both companies. We think they're both going to benefit from what we're seeing in the recovery right now. The reason we like Home Depot a little bit more over longer term is they went through so much destruction essentially for about 4 or 5 years that we think there's more upside with Frank Blake starting to put in distribution and some of the other efforts that he's putting in once just the macro recovery is done.
And I know one of the things that led to some destruction, at least for Home Depot shareholders, was this idea of being exposed to a more industrial space. How could you compare or tell investors what they need to look for as far as that angle goes for both companies?
Well, as you know, they sold off HD Supply. So they're not as exposed to the industrial space. They do have more exposure, though, in the weaker markets. They're more exposed in California and Florida. As those come back, if we believe there's a recovery, which we do, that will pull back California, pull back Florida into the mainstream, then there's more upside given there was more downside beforehand.
All right, Gary, we thank you so much for your time. Gary
Thank
Balter joining us there from Credit Suisse.